You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again to view a little bit of volatility. It's time for Volatility Views, the premier program for volatility traders. My name is Mark Longo, coming at you from the newly revamped TheOptionsInsider.com. If you haven't checked it out in a little while, get on over there. Got some cool stuff cooking and more stuff to come. We're just in the first wave here of rollouts, but it looks nice and pretty. Nice, shiny, brand spanking and new. Kick the tires and light the fires, as they like to say. Tell us what you think, what you like. If you don't like something, don't send it to me. Send it to somebody else. I'm just kidding. Tell us what you think. And, it's still unfolding, but we've been promising that for a while now. It's finally up and running, and for the most part, live. I can't speak to all of it, but for most of it, it seems to be working. So check it out, theoptionsinsider.com. Enjoy, and hopefully you're enjoying the slew of content that's been coming your way from all the legions of conferences I have done recently. Thankfully, not a ton this week, so I have a little more voice left, but it's been fun. Stay tuned to the network for all of that good stuff. Speaking of good stuff, we got some in store for you today on Vol Views, and joining me to help me do just that. First off, it's been a little while since he's been on Vol Views, but we're happy to have him back. He is the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the show. You remember how this whole viewing of volatility thing, how it works?
It's something to do with like a V or a V volatility, a spike. You know what? It's also confusing. I'm just glad Dude's here to help me figure it out. That's all.
Well, you are referring to our other guest. Also been a while since he's been on the program, Mr. Dave Lincoln. He is the host of the Short Vol Show over there on YouTube. Today, he is holding down the MIAX hot seat over there. Dave, welcome back to the show. I hope you're ready to talk spikes for a full hour, sir, because you're in that chair. It's your job.
I think I'm going to be learning more about it than speaking about it, but it's great to be back here on your show and great to talk to Andrew once again, my old mentor.
It's never really great to talk to Andrew, but we get it. You're being nice. We understand. So that's a nice gesture on your part. And before he can take any more umbrage at me, let's keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. This is, of course, the portion of the show we break down the week that was and indeed still is from a volatility trading and trending and analysis and development perspective. And, we were all feeling the fade last week. It was just a question of to what degree. Of course, last week we saw the trade war premium was in. The premium, the juice, it was there for the taking. The VIX Cash was over the 20 handle, spikes similarly over the 20 handle. Spoiler alert, they're both much lower now. VIX Cash at about a 15.5, so right around 4 points lower. Spikes around 15 3/4 or so right around 4 1/4 points lower. In fact, VIX Cash coming off even more now, getting closer to the 15 handle, so about 4.5 points here as well. So a lot of just erosion in the vol space. We were all feeling it. It was just a question of to what degree. Last week, I believe the meatball's at about a 14.06, oddly precise for him. I was being a little bit aggressive with my downside. I was at 13.25. I don't think we'll hit that by the course of the next hour, but crazier things have happened in the vol space. Yeah, we're seeing spikes right now at about a 15.5. VIX Cash threatening the 15 handle. So the erosion is in our old friend VVIX as well, coming off quite a bit at about a 95 right now. So roughly 8 points below where it was last week. So this time last week, it was all Sturm und Drang over the trade war. Will they, won't they? Oh my God, the sky is falling. Dogs and cats living together, mass hysteria. Fast forward a week, not a heck of a lot has concretely changed, but there's a lot of rumor and innuendo floating around that things are progressing perhaps a little bit better. We haven't certainly seen another rash of very aggressive tweets from the administration, which really seemed to set us off down a dark path in the marketplace. We've seen some of those dialing back a little bit as well. Maybe some of that also due to the fact that we're seeing some big major names like Walmart and others coming out with good earnings, but saying, this trade war, we're going to have to raise up some of our prices. Populists, I should say, politicians, easy for me to say, never really like that. So maybe some of that's why the trade war rhetoric is getting dialed down. Either way, the market seems to be moving full steam ahead. Dave, it's been a little while since you've been on. A lot's been going on in the world of vol, so catch us up. What's going on in your neck of the woods? What has really been lighting up your vol tape since the last time we spoke, sir?
Well, as you know, I'm somewhat of a UVXY specialist, and so I watch that one quite a bit. And like some of the other issues, like VXX this week, we've seen some overwriting in that space. But just as far as the general volatility market this week, I would say it's really been a tradable market. If you're a long, you can make money. If you're a short, you can make money. We've seen, back-to-back days where down one day, up the next day, down one day, up the next day. And that's what traders really like. So, and I have to commend you guys also on your crystal ball. Those are some really accurate predictions. I mean, from where we were last week. Wow, good job.
We have been doing pretty well. This week we're maybe a little bit bridged too far, but it has been. We've been wrestling that slippery pig pretty well of late. It's funny that you're still on the UVXY / kind of SVXY train. That you haven't really been dissuaded by all the, shall we say, neutering that's gone on in that space of late.
Well, you know what? The spreads have widened out a lot in the last few months, which has made it a bit tougher to trade, definitely noticeably tougher to trade than VXX, which spreads have tightened as the name changes kind of sorted itself out a little bit. But we have had some decent volume in there, and like I said, we've had a bunch of overwriting calls this week. But yeah, I've stuck with that one. I like it. Still is 1.5 times leverage. If I could trade options on TVIX, I would, but I still like the leverage. I wish we had a 2 times leverage optional product still.
Yeah, of course, the VIXocalypse kind of took care of that for everyone. So you're pretty much exclusively UVXY now. Is that kind of your weapon of choice?
UVXY, a little bit of VXX in there. I'll watch the paper in the VIX, but yeah, that's my main horse right now, UVXY, definitely.
Andrew, we've kind of talked about it before. We kind of have gotten off a lot of the SVXY, UVXY kind of train. Are you still utilizing any of those out there?
I don't use UVX unless it's really short term. Just the way I do a lot of pairs with SPY, so it's just extra contracts, and it's one level more of. I just think it's just one other confusing element for. I already have a strategy where you're pairing SPY with like VXX, so I think my clients are already full, have enough of one thing to learn without trying to throw UVXY. But I mean, UVXY is perfectly fine. It was more fun when it was a 2X product because it made the daily swings crazy. You know, it could do a lot of fun stuff. So as far as that goes, I thought that was. I still look at it. I just don't trade it that often. I've just come to like, I kind of stay in SPY and SPX and VXX and VIX options. That's kind of enough, I think, for me right now, to be honest.
This is the most
besides the scattering of some little equity here and there that gets interesting.
I think this is the most we talked about UVXY on this show in like a year. I think we actually have a listener mail about it a little bit later, so we're going to have more. Stay tuned, listeners, more. I think they're mocking UVXY, just a spoiler alert there. But so, Dave, you may take offense at some of our listener mail later. But just prepare yourself now. But, Andrew, outside of the ever-contentious UVXY, we're approaching the zone of the monk. How are things looking in the land of your vol newsletter and all your fun goings-on there in the pit of crazies known as the option pit?
Well, let's see. The strategy that I had is doing better today, although it was fully valued last Friday. I could just take the whole thing off and make nice money. But no, I'm greedy, so I didn't. Now at least it's looking better. VXX is kicking in a little bit on the downside. As far as what zone we're in, I think until this the trade war basically is, if nobody says anything for 3 weeks, VIX is probably 13 again. I think right now that's a near impossibility. So I think like 15 is the new 12 or 16 is the new 12. We're going to just hover around 16 vol, 16 VIX, up, down, all around until we get past this in the short term. And if you don't hear anything for a couple of weeks, right, you could see cash dipping down a little bit. But even when I talked about this like Monday, what I was trying to point out to people on the blog is, you know, that 30-day straddle was $95 on Tuesday, I think, when I wrote the blog, and by like Thursday it was down to $80, the at the money straddle. So, and they weren't putting the ball back in it. So, you know, that's a pretty, you know, in 3 days the straddle loses $15. Wow, that's a lot of decay. And it's not decay; it's them taking the ball down. So, just looking at vol in general like that, I think, you know, those expectations will lower and they'll lower and they're lower, and it might drive, and we might see the cash a little lower, but it seems like any drop is kind of hard won. So, you know, if we see 14 next week, I would not be surprised if we saw 20 again, because, you know, the Chinese throw the glove at us or we do it that way, either way. And that's what I think we got. So it is I think Dave said it well. He's like, you can be long vol and make money. You can be short vol and make money. I think what you got to do, though, is when you get your vol move, you got to take the money and run and then go do something again. So, because a move in any direction has not been lasting very long.
Yeah, I'm with you that I think until we get some concrete resolution on the trade war thing, it's going to be hard to live in the zone of a monk again anytime soon, I would think. You know, I mean, we may flirt with it ever so briefly, but I don't think we'll be down there for a protracted period until we get some sort of definitive, hey, this thing is settled. And if it's not, of course, all bets are off. Let's move on out here, see what's going on. Moving on out the futures curve here in VIX land. And as you mentioned, VIX Cash hovering around that 15 to 15 and a quarter kind of level here. And we saw, remember last show, it was oh so juicily backward. So much hand-wringing has been going on of late. I've seen people tweeting again, oh, the VIX curve inversion, so scary. You know, throwing out that term inverted with the VIX curve, I think it's very misleading. I think the Journal even something about this recently. And it's like, you can't use, that's a very loaded term. You save that for things like, you know, when the yield curve is inverting. That's serious business. That's when people really get spooked. The VIX curve, quote unquote, inverts, you know, every month sometimes. So it's just backward, lasts for a couple of days, and it goes right back. I think backward is a much better, more digestible term because it conveys a little bit, not as scary, I don't think, to the broad term. Or just, you know, things are kind of wonky right now. That's a good way to put it, too. If you say inversion, particularly after we just have the big debate over what it means for the yield curve to invert, when you use this loaded term like VIX inversion, people are running, screaming for the hills. They see places like the Journal running out there with it saying, it's terrifying, run for the hills. And it's already gone, listeners. So that's how scary the VIX futures quote-unquote inversion was. We're no longer backward. Last week there was a point and a half or so premium from the cash to that front month future. That's gone. It's actually about a quarter of a handle discount, the cash to the front month future, which is kind of not quite closer. Usually it's a little bit wider than that, but there usually is a healthy discount there, and we see that in a nice, healthy contango, pretty much shaping up again as about a 1.5 point premium. So it gets up there pretty quick to the 2 months out, which is, of course, the June contract out there. Then we kind of languish once again. We said it before. Once you get out to July, it gets in the 17 handle, and it kind of hangs in that 17 handle pretty much all the way out to Jan of next year. So there's not that much as a 0.6 point premium between July and Jan of 2020. So if you're going to hedge to July, it doesn't cost you a heck of a lot more. In fact, you can go out to Deece for 17.25. So there's a 0.15 premium from July to Deece. Let that sit in your brain for a little bit, listeners. You can go all the way out to Deece, not even a quarter of a point more. So yeah, interesting stuff afoot. We can debate that structure quite a bit. Maybe we will. Mr. Rock Lobster, anything out there? I mean, we've said this before, kind of that latter portion, the back half of that curve, still a little, I think, puzzling so to the lack of premium of any sort out there. I get it. Deece is usually a quiet seasonal time, but still, there's a lot of other shoes maybe waiting to drop out there. Does the structure we're at right now, I know the fact that we're not quote-unquote inverted, I know you weren't running around like a chicken with your head cut off, but others were. Are you calmer and less scared now? And then B, regardless, what do you think of the way the curve is setting up right now?
I don't think inverted is the right term. I think you're in backwardation or you're in contango, and inverted is just some stupid person writing that doesn't know anything about what they're writing about. So
yeah, well, the journal was beating that drum quite a bit over there these days.
Because inversion's like a big deal with the yield curve, and backwardation is just it could happen in a minute in VIX. So I think that's but as far as the curve goes, I think the flatness of the curve, and I finally settled on this, the curve is weird. And anytime there's uncertainty, I think just observationally, VIX curve generally tends to flatness. People don't really know. And what's weird is because the front end is more expensive, they're not charging as much for the back end. So it's that near-term stuff expensive is weird, right? Or, once you get flat, because you should normally have some contango, and then the stuff in the front is cheaper than the stuff in the back. And now, they're kind of bidding that near-term stuff is a little bit more expensive than normal. And for whatever reason, nobody wants the back. But generally, flatness means uncertainty. So I would say that this trade deal thing is the only thing I can think of that's, while it's still kind of ongoing and strange, I think that's messing the curve up a little bit. That is what I would just call a total guess, but it's an educated guess. So I'm going to stick with it. I haven't been able to figure it out, but I think that's what it is. And I think until we get like that sort of rich contango again, that just crushes the vol products and makes them so much fun and die, we're not seeing that right now. So until we start seeing that again, that's when I'll blow the all clear signal. But I still think, like I said, 16 is the new 12 for a while, at least for this month.
90% of the analysis of the VIX futures curve is educated guesses anyway, right? So don't demean yourself too much there. There's not a lot of hard, concrete, this is exactly why this is the way this is. But there's a lot of edumacated guesses. By the way, I think that's a good point. It's maybe a bit of a glass half full, glass half empty. The back looks cheap, and it kind of is cheap, but also some of that is in because the front just got bid up so quickly, right? So that kind of puts it in a little bit of perspective. Maybe you could say the front should come off a little bit as well, and that would make that longer term look a little bit more expensive. It's still relatively cheap. But still, it's interesting. It's very much a glass half full, glass half empty. Dave, where do you stand? Are you a glass half full guy? Are you a glass half empty guy when it comes to opining on the mysteries of the VIX futures curve, sir?
Well, there's not a whole lot of paper driving those back months out there, so I think they kind of just sort of guess it based on what calendar spreads are coming through. But like you said, most people discount the December because it's a little bit slower. There's more holidays in there. But, we're getting real close to expiration now. Expiration being next Wednesday. So you're going to see the front month futures kind of hug closer to spot right before expiration. And then people are going to start looking towards that relationship between June and July as early as right now, as they look towards the next expiration cycle. That's going to become more important to people. But, it did, like you said, pop back to around 8% now very quickly. But I think that's just a function of expiration coming soon and that future rushing down to reach spot.
Certainly seems that way. Let's keep on rolling here we explored some mysteries of the VIX futures. We could spend all day doing that, quite frankly. Let's move on to some of the mysteries of the options as well. Not as much of a mystery in the game being afoot out there. We talked last week, the spikes OI grew dramatically last week, or about a 5x coming off of expiration and now new contracts coming in. It kind of stayed kind of settled this week. OI roughly the same as what it was, and the top positions still pretty much the same. The May 14 half puts leading the charge, followed by that June 2025 vertical in the calls. Those have kind of been the big positions for the last week or so. Not much changing on that front. Again, we talked before about that. A lot of people keeping their powder dry until the spikes futures have launched and gotten out there. I know, Dave, we joked about it before, but have you been at least even intrigued for like a 10 lot just to dip your toes in a new product, or are you kind of waiting for the underlying to get out there as well?
Yeah, I haven't started in on this yet, so I'm just on the sidelines right now, learning more about it. Really.
Well, you're on the right show then, and you're in the right hot seat to learn more about this good stuff going on. A lot of good stuff going on in the vol space this week, as you might have seen. A little bit of vol happening hither and yon, going up, going down, mostly coming down this week. A fairly light day today compared to some of the recent action we've seen out there in the vol space. Only about 80-odd thousand contracts on the tape for VIX coming into showtime here. That's well south of the ADV, which has shot up. Remember I was saying before, it was pretty light for this time of year. It was shy of 500,000 contracts a day until the last week and change. The trade war ratcheting things up again, and now the ADV back up to a much more seasonally appropriate 668,000 contracts. So that's a lot of paper going up in VIX land. Let's break down, before we get into some of the individual days, let's break it down overall, see what people have on out there. What are the size positions out there, the hot VIX options out here for this week? Let's go from the bottom of the top 10 up to the top. Number 10, the May 50s. Interesting. May 50s. Those are, shall we say, optimistic. 158,000 of those bad boys open. No change recently, so those were on a little bit ago. But May 50s, that's, I do believe those are a new addition to our top 10. I'll have to check. Number 9, the May 37 halves. I thought those were the most optimistic of our list, but 50s. Bumping it. But May 37 halves taking the number 9 spot, 169,000 contracts open there. Number 8, May 22s, $1.86. Number 7, the May 23s. $1.97. Then we get to our first put on the list. The June 16 puts, 202,000 contracts open. Number 5, the May 15 puts, 218,000 contracts. Numero quattro here. The June 25s, 247,000 contracts. Number 3, May 14 puts, our final put on the list, 260,000 contracts open there. Number 2, the May 27s, 357,000 contracts. And number 1 with the bullet, the May quarters, the May 25s, 440,000 contracts open there. Total, a very healthy OI right now, north of 10 million, 10.2 million, right around 7.5 million on the calls and about 2.7 million on the puts. So all this paper going up lately, giving that ADV a nice boost, also giving the OI a nice boost out there. Let's move on to what we saw, some of the big prints. Today, the big trade out there, the June 25s going up 32,000 times for 50 cents right off the bid. They were actually a little bit wide for VIX, usually pretty tight. These were 30 cents wide, 40 cents at 70, going up 50 cents. So looks like it was an opening sale. We'll have to dig in a little bit more to find out. Also, and then but upside calls were kind of like the order of the day this week, order of the week, I should say. Yesterday, we saw upside calls trading the June 24s, 32,105 times for 47 cents. Those went up opening over there. Of course, on the CBOE, the market was 40 at 60. So near the bid on those as well. Yesterday, we also saw a lot of mid-market puts going up in May. The May 14s in particular seemed to be The option du jour going up pretty much 40,000 times, 20,000 times in the morning for 20 cents, and then 20,000 times a little bit later for 18 cents. Both times, well, one time they were 15 at a quarter, the other time they were 15 cents at 20. Either way, they're going up pretty much close to mid-market, or in that case, a little bit closer to the offer there. So splitting the uprights there. Also saw the May 20 calls going up 20,000 times, even money, but in unrelated paper here going up for 20 cents. At least it didn't go up about 3 minutes apart for the other puts, so it could have been a 14.22 risk reversal out there, but it doesn't appear to be that way. Excuse me. These calls went up for 20 cents. They were 20 at a quarter, so on the bid there. Also worth noting, this is an interesting one. I'd like to get both of your thoughts on these, maybe in general. The put, we see a lot of call 1x2s, ratio 1x2s in VIX. Usually it's selling 1, buying 2, or buying 3, or buying 6 if people get really crazy out there. We touched a little bit, Mark and I, last week on the notion of put 1x2s. You don't see them as much. Starting to see a little bit more, including yesterday. We saw the June 16 14.5 put 1x2 going up 7,500 by 15,000 times. Looks like they did it for 17-cent debit. It seems like $1.27 on the puts, which was right off the actually as close to the offer. They were pretty tight, $1.25 at $1.30, and then the puts went up on the bid. They were 55 cents at 60, going up 55 cents, 15,000 times. So $1.10, $1.27, whopping 17 cents. Let's go back the other way. I'm curious. Dave, what are your thoughts on, I know you like the short vol, you host a short vol show. What about doing a nice juicy put 1x2 in VIX land? Is this a strategy you like? Do you prefer straight up put spreads? What are your thoughts on ratios to the downside here?
Yeah, I don't really deal with them that much. I understand why people do that, but I generally deal with just more straight up verticals to the downside. I think, yeah. So I haven't been dealing with them that much as of late.
Mr. Rock Lobster, same question for you, sir. Are you a fan? Are you not a fan of the old 1x2 out there in VIX? Particularly, not talking calls this week, talking the put side, sir.
I think that the call 1x2, you really need VIX to blow up hard, for it to work. Other than that, I think it's a kind of an annoying trade. The put spreads can work, but I think they're really expiration plays because you don't get because VIX is so weird and sticky because of the future and how the cash works. It's really it's kind of like what I call like a William Tell trade where, okay, where are we going to land at expiration? Bling! And then you let your arrow fly and you see where it works. And I thought we had that conversation. I thought like that 16.14.5 was probably the ideal trade if you could get it on for like a dime or something like that, something relatively cheap. And then you got to just ride into settlement and see if you score or not. Because I don't think 13 is in the cards unless they really drill a settlement. And I have a bunch of 15 puts that I'm going to hold into the settlement anyway, so there's no way I'm going to get that lucky. I own them for a slight credit, but I want to just see what I get out of them. And obviously, we're not getting anything out of them this week. So I think if you do the 1x2 on the put side, it is definitely a settlement play. You're really looking for settlement to play settlement. And, you kind of can wiggle out of them for some money if you get a great pin, coming into the term. So, for the listeners that want to learn how to trade them, look at the 16, look at the 16.14 is perfect to look at. Watch how it's pricing into, into Monday, Tuesday, and then you have settlement Wednesday. So right now, 16.14.5, I think you could put that on for 15 cents, if I'm not wrong, or 20 cents. And right now, let's say 35 over 120 is 70. So you could sell it out right now for 50, right? Because you almost have that perfect thing where VIX, the future's just sliding down to the 14.5 strike, but it's not too fast, too far yet. So you could get out of it if you could get a decent fill and sail, working out of it. You could work out of it, let's see, 35 over 115, that's 70, 45 cents. Yeah, you can get 20 cents out of it. So as long as your expectations aren't crazy, I think you could work into it for 25 cents maybe last week, unless I'm totally wrong on that. And you're working out of it for a little bit of a double. So I think if you get them cheap enough, they make great trades into settlement. I wouldn't start looking at them until you were maybe 9 days out. And then you got a shot at them. And then they can be really interesting trades and ways to make money. But to me, it's a settlement play. And it's not I don't think it's a beginner trade by any stretch of the imagination, although VIX is not a beginner product. But that is my take on them. And 1x2s, I much prefer like a butterfly on the upside or something like that in backwardation. I think that stuff looks better, but that's not really a 1x2. So different trade.
Not really.
There you go. That's that is my spin on the 1x2.
Yeah, this is definitely not a beginner trade at all, particularly around the settlement time. You got to have a deft trigger finger on when you're going to get out of this thing and have a good plan for it, because it could go some funky ways, as you just illuminated. But it is an interesting one, just for it's not quite a unicorn. We just don't see them as much as we do the call ratios. So always fun to point out, particularly for some decent size 22,000 contracts going up in this trade yesterday. Look quickly on Wednesday and Tuesday. It was kind of an interesting dance Wednesday and Tuesday with some upside funky calls going up in the June. These are the 12th. These are in the weeklies. 26 calls going up yesterday, 31,900 times for 45 cents. These were, there were 36 cents at 50 when this went up. Going up, they said opening here on, of course, the SIBO for, again, 31,000. Also more of those May 14 puts going up mid-market this time for a dime. About 14,000 of those on Wednesday as well. But on Tuesday, we saw the exact same print going up, or the same number of the exact same, or actually, I take it back, because these are the June, they look like they were the same, the 12th, but these are the 19th. So someone doing the exact same amount the day before, 31,900 again, of upside, but a week farther out, and then expiring on the 19th as opposed to the 12th, doing the same strike, 26 calls, doing them for 56 cents this time. So it wasn't quite, at first blush, it seemed like it was the same trade. Those were not opening. So interesting stuff there. They're going up. They were 55 cents at 60. They went up for 56 cents. So it looks like pretty much upside call sales on that 26 strike across a little bit of a strip there from the 12th at least to the 19th. Where the interesting action was. Looks like a bit of a size AUG combo, maybe a straddle going up on Tuesday as well. Looks like maybe leaning towards a straddle. I don't see a lot of size straddle going up in VIX very often. 30,000 times the AUG 18 puts and calls trading for 235 on the calls, 245 on the puts. Both of them pretty much right on the offer. Again, there's a little bit, you got to take that execution with a bit of fudge, because it probably is a combo more likely. And so they have a lot of wiggle room on where they put up the tie component of that. So just because they lifted the offer on both doesn't mean they were buying a straddle. They could have potentially. We just don't see that a lot, let alone for that size. It probably was. Something tied to a wee bit of the futures there as well. All right, let's move on to another product I know Dave likes sinking his teeth into. A lot of you guys out there like sinking your teeth into, mostly on the downside. It's our old friend, formerly known as VXXB. Dave, are you aware that we here on the Volatility Views program single-handedly renamed VXXB to VXX? Were you aware that we had that power?
Oh, I did not know that was you that did that.
That was totally us, yes. We held Barclay's feet to the fire and said, this far, no farther. We refuse to say VXXB. It just simply didn't roll off the tongue. It wasn't good branding. And you know what? They agreed with us. They changed it up. So our audience here has a great deal of power. VXX, that magical line I like to talk about out there usually is around that 30 level. We were north of it last week. We're back down below it again. We're at about 2 handles lower. We were right around the 30 handle last show, this time at about a 28. Let's see how much paper we have lighting up the tape out there in VXX. Actually a pretty decent day out there, 102,000 contracts on the tape. The ADV is 340, so not quite there. Of course, some of that's elevated from recent trading days, but still, a little bit stronger day than we've seen of late. The ADV just a week or two ago was 160,000 contracts. So that ADV has sparked up given some recent activity out there. Let's go out here and see what people have on in the land of VXX. that we might like to, let's just go from the top here. We'll do some of the top 5 really quickly. We talked before about how it was more call heavy than you might think in the top 5, top 10. Number 1 is still the June 40 call, 62,000 of those bad boys open out there. Number 2, the May 27 puts. Now we're getting some put action here. 50,000, almost 51,000 of those. Number 3, the June 24 puts, 42,000 of those bad boys. Then number 4, the June 50s. 38,000 of those. And number 5, right on our top 5, June 45 calls. So 3 of the top 5 in VXX land right now, listeners, are calls. There's 36,000 of those 45s open. In fact, there's a decent amount of calls. That ratio kind of holds for most of the top 10, not the top 20. It looks like a little bit of puts getting in down there towards the bottom portion of the top 20. But in general, decent amount of calls open out there. Dave, I know you like yourself. I mean, you're more of a UVXY guy. I won't hold that against you. Maybe our listeners will, but I won't. But what are your thoughts out here on VXX land, how it's been shaping up lately, and what you've been up to out there, if anything?
I think that a lot of this has just been people kind of chasing that spike back down, some of this overwriting in the calls. I have a lot of people ask me, for example, a trade went up today, later on today. It was 10,000 of the May 28 puts went up, sort of mid-market. And I just kind of want to caution viewers, when you see something go up like 10,000 puts like that, it's very hard to interpret who's doing what or whether it's a bullish or bearish play. I have people all the time see a trade like that, 10,000 puts go up close to the offer, and think that that indicates somebody knows something and that this is going lower. And I really like to caution people, you see 10,000 puts go up mid-market, it really is not an indicator of which way things are going to go. A lot of people get confused about that sometimes, I think.
No, you're right. There's a lot going on. We said it many times on all these vol products. You know, there's other layers we don't see, other positions we don't see. A lot of on the OTC space, could be in the variance side, could be just slinging on the futures. We don't see the tie. A lot of things we don't see out here. We just can analyze the calls. And you're right. Those 28 half puts were pretty sizable today. 10,000 times opening for 65 cents. The big print of the day was actually some upside calls, kind of getting back to what we were talking about earlier. The June 41 calls expiring on the 28th, so also in the weeklies out there. 57 cents, 21,402 times. Oddly precise numbers going up today, which is interesting. For 57 cents, right there on the bid, that is opening. That could potentially be what you're talking about earlier there, Dave, people fading. We have seen a lot of upside buying up there in VXX of late. Maybe some people getting the heck out of Dodge now that it's going up, but this is opening, so clearly they're repositioning. But yeah, in general, it has been fascinating to watch the paper that's been going on out there. Mr. Rock Lobster, I know your crazies like themselves a little bit of VXX. What's been catching your eye out there? What are your crazies up to in VXX land now that we're back below the magical 30 handle, sir?
As far as the crazies go, we're at this part in the cycle where I think the vol products are very interesting. I know Dewey probably understands this. By the way, when I call him Dewey, that was his old acronym. So it's hard to calling him Dave Lincoln it almost sounds too freaky to me, like he'd be some alien or something like that. So, and I think Dave is looking at it as well as I am. Like, okay, next week, the VXX and UVXY are all the June future, and the June future is hovering 16.5 or 17. So, like, where you make hay in these products on the downside is when that future comes under compression and you're at that weird part of the cycle. So, it's like anything else. You understand what your product is. And I would say we are close to the option pit fair value of vol for the term, for the VXX curve. We do have an observed fair value for VIX, for the VIX futures at any particular point in time. And again, that's just a theoretical value, though. So anybody that trades knows, okay, you have your sheets, you have a value, and you think that's what it's worth, and all of a sudden the market goes totally insane, and you throw your sheets over your shoulder, and you go, okay, I got to do something else right now. So while VIX is approaching that number, and the futures are kind of, the back part of the curve is just still really kind of, July and August, they're super flat, I think, for our terms. And I think that does reflect this trade thing. And I'm only even, like Dave said, the back stuff doesn't trade that much. I'm really looking at June, July, August, where there's a little bit of volume. But right now, like VXX next week on Wednesday is 100% that future, that June future. And if we see, if we do see a 14 cash, coming into settlement or something really low where they kind of drill it, that's going to be a real expensive future. And a product like UVXY can get nailed on that day. If that future's down maybe 50 or 60 cents, percentage-wise, that's pretty big. And for UVXY, that's like $1.50 or $2 move or something. So it's a pretty good-sized move at this particular point in the cycle. So it becomes, I think a part of your vol trade with those products is where you are in the particular cycle and the mix of futures in the bag. So then you get kind of an idea of the expectation to move. And I think we're coming into the interesting part of this where if everybody just assumes this trade war thing is going to kind of drag on, this is just going to become the new norm, the market will start to price it like, all right, well, they're going to keep slapping each other in the head, but eventually something will happen. Then that's when you see lower vol again. And so right now that future's hanging there basically waiting for some kind of confirmation. So the vol products can be very sticky while that future doesn't do anything. So if it's sitting around 1670 and it oscillates between, here and maybe back up to 17, while there's all this talk going on, you're not going to see that great performance on the downside out of UVXY or VXX. But if you see any slip or any slip in VIX, because it's just basically sitting there hanging, then you actually see those products make some money on the downside. And right now, since there is some contango, it's going to take a while for them to get some giddy up if VIX actually starts to rip. So VIX needs to rip hard now from this level to get those things really to start moving again. So it is not the most, it is close to an interesting spot to trade the vol products. But I think you got a lot of hurry up and waiting over the next 4 or 5 days.
Yeah, when it's ever that June future you mentioned earlier in the show is kind of one of the mystery parts of the curve there. What exactly is up with that future? So yeah, that makes VXX and related products a little bit more interesting, a little bit more terrifying, perhaps, depending on your point of view. This time of the year. Let's keep on rolling. Speaking of this time of year, it is earnings season, listeners. Still big names popping off. A lot of big names popping off here this week. Let's see. Who did we have? We had Macy's on Wednesday. Cisco, Uncle Mike, wherever you are, do not listen. He's terrified of that name for good reason. They were on Wednesday as well. Before the bell on Thursday, we saw Walmart. They have the aforementioned tariff price hike. NVIDIA after the bell. Pinterest apparently just taking it on the chin here. The people not liking stock off 17% after the go figure. One of these new IPOs doesn't make money, and then people get all sorts of up in arms about that. Apparently, this is the kind of thing that always cracks me up whenever they go from that quote unquote secondary market of the VC market where these bubbles exist and they keep looking for those unicorns, and each round is a higher valuation than the last because no one wants to have a down round, et cetera, and so on and so forth. Then they meet the crucible that is the public market, where they don't care about any of that crap. They just want to see your numbers. They don't care about disappointing your VC or anything else like that. And all of a sudden, go figure, these companies start to tumble because they can't meet those expectations. They still got a good payout in the IPO, so they're not obsessed, or I should say upset about it, but still. They're not happy going forward, obviously, for this sort of thing. And Pinterest, folks not liking what they're seeing. Let's see what else is going on here. Earnings volatility is a big driver out here this week. Let's see. Let's go to Walmart. We talked about them earlier. They're one of the big names everybody was talking about this week. Remember, these reports available on The Options Insider, the brand spanking new, theoptionsinsider.com, courtesy of our friends over there at Orats, completely free of charge. Walmart was on the 16th of May before the bell. They closed going in right about $100, $99.88 going into their announcement. They were pricing in $371, so nearly $4. They delivered about half of that, only $218. So oddly muted, given the fact that they had some decent performance. Maybe some of that having to do with the mention of the impact of tariffs going forward. Let's see what else we had going. We won't do Cisco in deference to Uncle Mike. AMAT, Applied Materials, on the 16th as well. They went into their announcement about 41.66. They were pricing in nearly $2, $1.85. They delivered about 2.25, so a little bit outperformance there when it comes to AMAT. Baidu, they were at 153.70 going into their announcement. They were pricing in 6.25. And they actually delivered, get this, $23 to the downside. So yeah, roughly 4x what their straddle was pricing. So Baidu, go figure, delivering a little bit of that juice there in an otherwise somewhat staid earnings season. Let me just look here really quick. Again, you can find all these reports for yourself there on the site, listeners. John Deere was today. I don't have them breaking out. So there's still some names popping off. If you are intrigued, if you want to say the heck with the macro, let's get micro, let's sink our teeth into an actual straddle and see how it performs, you can do that. And we got the data for you there at theoptionsinsider.com. Now let's see what you guys have for us. It's time to check in with a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the Vol voicemail. I think we've opened the floodgates, Dave, or I should say you've opened the floodgates, Dave, with your comments on UVXY, because people are chiming in now. I guess we've awakened the sleeping monster here. Wake up, bud, chiming in, listening to the show. He says, I haven't traded UVXY or SVXY since SVXY was about $90. So back pre-VIX-ocalypse, shall we say. He says, lol. I just don't trust them anymore. He wants to check out the oil sector instead. That's being ignored, and all we hear is FANG tech. I would be selling all tech and buying energy, healthcare, and financials. Well, a little bit of a digression, I should say, at the end there. But Dave, he's not trusting your friend UVXY or its sibling there, SVXY. Can you really blame him?
Well, like I was going to say, I can't really blame him. I mean, the company that run ProShares that runs UVXY really threw a wrench in everything by changing their formula midstream. I don't think it was fair at all. I got hurt when they changed the leverage, and it shook everybody that somebody can just come in there and change the structure of the product overnight like that. And so I don't blame people that they're frustrated with that. But when it comes down to it, in the end, it's about us making money, and it's a product that's been profitable for me. So I went back to it. And if you can, however way you can find a way to make money in this market, I'd say stick with it. And if UVXY happens to be that, or SVXY happens to be that, then so be it.
There you go. Diminished expectations, but it could still function. I wasn't more of an SVXY than a UVXY guy, but I can see where you're coming from. Speaking of UVXY, we had a longtime listener here, J3 Dingle. He chimed in earlier this week, so everyone's got UVXY on the brain this week. He said, I saw on Bloomberg that one of the 20-plus Democrats running for president owns UVXY in size in his portfolio. He says that alone should be disqualifying for him. I think that's pretty funny. I just love our audience. That's how savvy they are. If you own a neutered vol product, bam, you are out of the race for president. What do you guys think, Dave and Andrew? Should that be a disqualifying factor?
Those are fighting words. Yeah, I mean.
Yeah, this might be your favorite candidate.
Insult.
He doesn't say which one it is. You may want to vote for this guy, David. This might be the guy you like.
Well, the problem with it, I think it would be David. It would have been better for Dave if it was a Republican candidate and not a Democratic candidate. I think he's a little bit shaken right now, to be honest. We better take his pulse.
Those long-held views fall by the wayside when it comes to money. This guy likes UVXY. Maybe you have, or a gal, I don't know who it is. So maybe you have a kindred spirit there. I'm with J3 Dingle. If they own size neutered vol product, I'm not overly excited about their potential in the highest office in the land. But I thought that was hilarious. We've had listeners of this show before run for run for Congress based on what IB charges for VIX futures rates and margin rates. So we have people who are deep in the weeds, and I love you all out there, which is why. So yeah, I'm kind of with you, J3. I'm not a huge fan of owning that. They should shift to something else. But Dave here is a fan, so there you go. Maybe we've got a little bit of a differing opinion. So it makes a market, right? All right, T Lima. This gets to kind of a timely one. We were just talking about something like this. T Lima wants to know. He says, I heard you guys hitting on 1x2 put spreads in VIX last week. What about VXX? There are a lot of juicy puts 1x2. I think he means put 1x2s, lining up for small outlays and maybe even credits. I'm looking, he says here, he gives us an example. I'm looking at the Deere 2823 1x2 that can do for around 45 to 65 cents. There are similar spreads lining up across the term structure. Also, he's got a multi-part question. Also, do you have a preference to longer term or shorter term when trading the 1x2 put spreads in these products? So he kind of lays out a scenario here, Andrew, of a longer term out to Deere 1x2 put spread. Most of the scenarios we've discussed and have usually typically been shorter term. We don't see a lot of longer term, so that's an interesting point in and of itself. But we just you just broke down your thoughts on VIX 1x2s. Are you more or less intrigued by a VXX put 1x2, sir?
I think the VXX can move, right, as opposed to VIX, which sort of hurries up, it goes nowhere, and then moves all of a sudden. So I'm just looking at his trade. So I think that once VIX is kind of in the zone 1 area, you could get away with a 1x2, buy one, sell two, because it kind of everything going down crawls, but there's negative skew in the puts. So you don't get great buy one, sell two prices. I want to make sure I'm reading his thing right here. Look at the D's 2823.
I didn't check. I
can't see exactly what he wants there.
I'm assuming he wants to buy one and sell two. I'm assuming.
I thought so. So could that work? I mean, the problem with the 2823 in a product like VXX is, if we see 13 vol, 13 VIX for a month, you're going to be trading 25, and you already have the 1x2 on for Deece, and you're going to be kind of stuck in it, and you're going to be holding on to it, and it's going to be tough to make any money on it. So I think it's a harder trade out there in that direction because of the ability to kind of close it. Now, if we have the up and down choppy vol market, then it could work out well. But I mean, you're waiting for a damn long time to make any money on it.
Deece is probably the biggest question I have about. I would maybe like it a little bit more if it was, a little bit closer to home. You could play around with that a little bit more.
Yep. Like I think you could do that in July. If you could get some decent money for something like that in July, you work out the decay and just at least get some sort of theoretical landing zone for it. I think that could be a decent trade. And what makes it what could be a great trade is you get a little volpocalypse or a jump or something. Like even a quick one, you might be able to buy a couple of the shorts in for nothing and kind of juice it if it goes back down again. So I think you have to watch that. Now, if they put that on when the vol's super high, maybe last week when, everybody's like, freaking out. That could be a decent vol sale, and you could that would be, I think, scalpable at that point. But I think it's difficult on just sort of ordinary circumstances with VXX because ordinarily, like Dew knows, VXX and UVXY just spend a lot of their time just kind of, going down. So that 23 could easily be, at the bottom of the run out. You could already be, it could be that your 1x2 could be well in the money and you still got, 6 months to go. And you're like, okay, now what do I do with this thing? So that's something you have to be careful about. I think the theoretical low for VXX in December, if we have like what we call like a normal contango, is probably $17, something like that. Maybe a little less, $16. So we have kind of a boring market, which we haven't really had in a while. But if you do, you're going to be trading VXX 16 by December. Then what do you do, right? Then you have your 1x2. You're like, what do I do with this thing? So that far out is not my favorite unless you trade it in a very high vol area, sell the Vega, you get the Vega crush, unwind it, and then rinse and repeat when you get the vol blowing up again.
Dave, you like it the other way? You'd rather sell one and buy two?
Yeah, I mean, I would put those 2 units in my pocket and try to do something lower sell something lower against it probably. I just think that the farther out you go, the more that we have the potential to just roll through both those strikes and end up way below them.
That certainly is the risk going out that far in a 1x2 like this. And the risk for us now is we have to wrestle with the VIX and spikes monsters. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, the most dangerous portion of the show, at least for us here on the program. For you guys at home, it's just enjoyable. But Dave, since the last time you were on, the crystal ball has magnified. It is now a much larger, more difficult beast because we're not just predicting VIX Cash anymore. No. We are also prognosticating upon where spikes will be as well. Luckily, they're usually within a decent range of each other, so it's not like you're picking, apples and hand grenades. They are very, very close by design. Makes it a little bit easier, but still, you are prognosticating on two products. Coming into the end of the show here, remember we're picking for the end of the show next week, listeners, not the end of the day, the end of the show. Coming into showtime here, spikes at about a 15.5, VIX Cash right around 15.25, so pretty much where they were at the beginning of the show. Didn't get that erosion I would hope would kick in last week, so none of us win by our rules of our show, which is we have to be at least within a handle. I was at 13.25, so I was about roughly 2 handles away, and the meatball was 14.06, so he was about a handle and a half away. So neither of us win, which is a long way around to saying, Dave, because none of us won this week, as our guest, I give you the dubious honor of prognosticating first, sir. So where do you want to be on the spectrum? You picking a little upside, a little downside, where we are right now? What are you feeling for next week?
By the way, I'm going to interrupt and just say, dude, he's letting you go first so he can scum you for 10 cents.
Right. That is the Andrew move du jour. He did it, I think, as soon as the MyX guys came on the show. It's the first time Andrew's on. He's like, let me scum you by 10 cents. Welcome to Vol Views. It was pretty funny.
I take umbrage, sir, at that.
Listeners, it's all in the record. You can go find it for yourself. But that said, he's just trying to buy himself some time, Dave. Go ahead.
All right, so I'm going to hedge my position, which is short right here, and go with 16. I'm looking for another poppage.
16 even. Okay.
16 even.
16 even. And Andrew, just to show there are no hard feelings from your last bit of scumbaggery that you did last time you were on the show. I will allow you, since you haven't guessed, it was the meatball, wasn't you? I'll let you go next. Usually I like to go first or definitely second, but I'm being a charitable guy. I'm boxing myself in here just for your own enjoyment, so I don't get your umbrage. So what do you got for us, sir?
Oh my gosh. All right. Well, I will go VIXY. I'm going to go the other way, Dave. Honestly, 14.25. And if I go VIXY 14.25, I will be spiking 14.70.
Wow. I like it. Very precise. I'll allow you to give just one number if you want to. If we can do that sometimes. It's a little bit easier in that sense, but you are picking for both. So it gives you a little bit of a double fudge factor, if you like to see it that way. So we got 16.
That gives me a range. I have 2 shots to be right.
It does give you a range. I see what you're up to there. Nothing escapes my eye. All right, so we got 14.25 on the downside, at least in VIX land, with the Rock Lobster. 16 to the upside. Again, 15.25 right now. VIX Cash, 15.5. This is why I don't like letting you go before me, Rock Lobster, because I was leaning a little bit of downside. But I don't think, I was aggressive last week, and part of that was for the fun of it. But part of that was I was feeling a little bit less. I was feeling closer to probably where you are now. I think this week, given what we're seeing out there, where we're hanging, I think we have some downside ahead of us, but not a ton. I'm going to do the one number, which is, tell you what, I'll do what you did to give you a little bit more room. I was going to say 14.75 for both of them, but that leans on your spikes prediction, and I won't be that guy. So I'll say 14.75 for VIX Cash, 15 even. There we go. How's that? Giving you a little bit of wiggle room. 15 even for the spikes itself. All right, there it is, listeners. Unfortunately, that music means we have come to the end of another super enjoyable journey through the world of volatility. Man, we talked everything. We talked 1x2 put spreads to the downside in VIX and VXX. We talked other ratios. We talked who's up to what, selling calls and trading calls on the upside in VIX land. We talked VIX futures, the mysteries therein. We talked what's up in spikes in VIX Cash. We talked even UVXY made it on the show this week. Listeners, if you don't like that, send your hate mail to Dave. And Dave, if they want to check you out there on the Short Vol show, sir, where should they go? What should they do?
The newly renamed channel of VIX Crush on YouTube you can find me at, or at The Famous Dave on Twitter.
Oh, it's not the Short Vol show anymore?
No, the show is the Short Vol show. The channel is VIX Crush now.
VIX Crush. Even though you only trade UVXY. Interesting. I like it. I like what you're doing there. A little bit of branding. So the channel, listeners, is VIX Crush if you want to subscribe. And how frequently do you do the Short Vol show?
A couple, 3 times a week.
Oh, so there's just kind of whenever you're seeing the markets lining up for a good show?
Indeed.
And listeners, if they want to buy a VIX call, they should not tune in because you'll mock them furiously.
No, we like people that are long too.
Okay, so you'll handle all comers. There you go, a VIX Crush over there in the Short Vol show over there on the old YouTubes. And Mr. Rock Lobster, sir, if people are intrigued about all this vol stuff, maybe they want to come talk to you about 1x2s in either direction in person, perhaps in Chicago, perhaps over a tasty steak. Where should they go? What should they do?
You go to optionpit/events. It's actually a button on our website that says events. I will be there. Sebastian will be there. A lot of our trading clients will be there. Mr. Longo will be there eating a tasty steak on Mr. Sebastian, which is always, I guarantee, his favorite steak of the year. And you can learn yourself some trading.
It is Gibson, so it's already a pretty good steak, but the added seasoning of the fact that it's on the meatball makes it just extra delicious. It could be raw, it could be rancid. It would still be delicious just for that fact alone. So check it out if you haven't already, listeners. Optionpit.com. We'll put out some information for that as well. I think we already have. We'll put out some more so you guys can find it for yourself. You see me, you see the Rock Lobster, you see the meatball. Maybe we'll get Uncle Mike down there. All sorts of fun stuff going on. Some other surprise guests. You got to know, you have a litany of speakers. I think the Flow Master will be there, Mr. Schwartz. So all sorts of fun stuff. If you're going to be in Chicago, you owe it to yourself to come on out and check it out. It's a fun time. And on behalf of the Rock Lobster and Mr. Dave Leakin, a.k.a. The Famous Dave, not spelled the normal way, F-A-M-I-S Dave, on the Twitter machines, and indeed myself, I want to thank all of you out there for downloading and streaming and subscribing. We'll see you next time for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.